The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Well, crypto firms are weighing in on what this latest infrastructure bill could mean for their business. Our next guest is the Chief Compliance Officer at crypto custodian BitGo, which recently just banged out an over $1 billion deal to be acquired by Galaxy Digital. Joining us now is Jeff Horowitz. Welcome to the show, Jeff. So when taking a look at these enhanced reporting requirements laid out in this U.S. infrastructure bill that potentially expands the definition of a broker in the crypto industry, does it impact your business at all?
Yes and no. It's a very broad definition of anybody who moves crypto versus, the way Jack Dorsey put it, somebody who's involved in exchanging crypto and fiat. We don't do that piece of it. That's more for exchanges. But broadly written and broadly interpreted could mean that counterparties that are not in the middle of these transactions may have some reporting obligations, which really would be impossible for us because we don't have a cost basis of people who send crypto in or send crypto out. So we're going to continue to have that conversation with legislators and regulators to better define what they mean by broker.
So how do you handle it
over the past? Sorry, go ahead, Lawrence.
Yeah. So how do you handle it then? I mean, is there another way for you guys to profit over what's happening in DC right now, or do you think that these kind of regulations would be so onerous that you might have to swear or change your business model?
Yeah, I think we still need to see how this will actually get written into legislation, and Treasury will have to define that. And then we'll figure out, does that affect any of the broader crypto infrastructure and markets, including custodians like us. I don't see it as a day one issue for us. But as we've seen this week, really broad and not narrowly defined definitions can mean a lot. And to put a bill out there and figure it out later is not the best way to go about defining sensible regulation. We've had ongoing conversations with Treasury and regulators for 2 years now, but I think we still have more to do on the education front.
One of the larger narratives of crypto over the past year has been the role of institutional investors, and I think that's something you'd have a little bit of insight into. What is the status of that? Are you still seeing more institutional money coming in? Do you feel like that's still a very strong force in the crypto world?
Absolutely. We are seeing more institutional adoption, more customers coming to us and wanting to custody with us, and then explore other products and services through the use of BitGo as their main custodian. I think the price increase is really not about the legislative discussions we've had this week, but about broader crypto adoption for the institutional markets. I think every week you see a new mainstream company getting involved in this, and we're excited to see where institutional adoption is going to go throughout the rest of the year.
So, Jeff, BitGo is no stranger to politics. The U.S. government recently yanked BitGo's hard-won deal to be the custodian of cryptocurrency seized by the U.S. government, and the contract was handed to Anchorage, a smaller competitor, based on a technicality, which is that BitGo is simply too big to win a small business contract, but not really concerned?
Look, so we won the first bid on that, and it was awarded to us. There are some technical challenges of who can be considered a small business, and their interpretation of that actually disqualified us. And there were protests about us winning the bid. I've heard that Anchorage, who won the bid after us, has also had complaints or protests against their bid. If you're going to give somebody billions of dollars to custody, I don't think you want to award that to a small business just because that's the way the government has structured some of their bidding process. So we'll see how this plays out. We were honored that we were chosen as the safest place for the government to store their crypto. We'll see how it plays out in the long run, and maybe they put this bid back out not under the Small Business Administration requirements.
So, Jeff, along the lines of what I asked Octavio, are you seeing any large movements internally as well among wallets? Are you seeing rather unusual sizes being moved back and forth for any reason over the past few days?
No, nothing out of the ordinary. Those would be more movements from exchanges to other places. But for us, we're just seeing more institutions wanting to bring in crypto assets and custody in a safe environment with a regulated crypto custodian. So that trend just keeps going up. Our sales team is receiving more calls than they, on a day can really handle, and we're deciding, who are the biggest players in the space, and how do we scale quickly to be able to take advantage of this increased adoption.
All right, Jeff, we got to wrap up. But before we do, I understand you're a former Coinbase executive. They're about to release earnings today. Any thoughts?
Look, we're in a crypto bull market. I think Coinbase is doing well as a company. Their stock was up yesterday. I am interested, like everybody else, to see what their earnings report at the end of the day is. But it's great for the crypto economy. The more companies that are in the space and are doing well continues to make our conversation mainstream, just like it was all week about the infrastructure bill. So I was proud to have worked at Coinbase, and I'm excited to see how the entire crypto economy grows.